Hey traders, welcome to the Wednesday webinar. Still don't have an official name yet for it, but welcome nonetheless. Elliott Wave Wednesday, the Wednesday live stream. So let's see. Let me just get the checkup confirmation for my team that we are rolling. Let me get the questions up. And all right, sounds good. Sounds good. Let me just go over here and watch page. So how's everybody doing? What's going on? Happy Wednesday. It is the 23rd. We have futures bouncing back here a little bit after a rough session yesterday. So got some interesting kind of positions that the market's in. I did a YouTube video yesterday based on that free video. So we'll kind of talk about that. Victoria, good morning. I, in the future, will be bringing our Forex team in to look at the markets as well as the crypto. So I'm just going to be sticking on equities for now. And as I said, as this live stream continues to build out, we'll have more components. So bear with us on that we do cover the foreign exchange markets heavily. And there's Alex right there. Good afternoon from Belgium. Hey, everybody. Throw your locations in. Where are you guys? This is amazing, like the reach that we have here. Yeah, Eric, we'll talk about that. Are we over the dead cat bounce? So, yeah, a lot going on. Other than that, what else? Announcements. For the Breckenridge event, anybody going to that Breck event here in February? I will show you that quickly. I'm just reading responses here. Arkansas, Texas, Memphis, Toronto. I am here. Where's here, Brian? There's Toronto, Texas, California, London, Greece, Toronto, Ontario. Very nice. Very nice. Where in Greece, Michael? Morocco, Sweden, Finland. Hello from Tenerife? I feel ignorant. Bernardo, my COO. What's up, brother? Fort Myers. Very nice. Okay, so let me just throw this out there real quick. So my buddy JC Peretz and Brian Shannon put this event together. Let me just get this announcement out of the way here quickly. We'll do that. And, oh boy, that's not a good sign right there. Let me just make a quick adjustment, and then I will get to the point here. Position 1. Every time I open this software, I'm still learning, as I said, every time I open this software, there's some little surprise that comes in there, but that's okay. Okay, there we go. So this event is February 22nd, 23rd in Breckenridge, Colorado, which is awesome. So it's about 7 or 8 of us. JC and Brian are hosting the event, and then this is the lineup. So this is going to be pretty fun. So Dr. J is going to be there from CNBC, Sean, me, Tom, Kim, Howard Linzen from all over the place. So check it out. I was a little late booking a hotel yesterday, so I wound up getting a 2-bedroom. Anybody wants to stay with me? Come on, you can stay. So any information, if you're interested, let me know. If anyone's going, cool. Give me a heads up. It will be a lot of fun. We'll be skiing and talking trading. Okay, so that's it. The other thing, CNBC tomorrow. I'm doing Power Lunch tomorrow, and that's about it. So to markets, let me just say here quickly, guys. This is a market where I don't think it's, for me, I don't think it's optimal for my particular trading style to have a lot of capital deployed. I have a lot of cash right now in my shorter term option trading accounts, very small positions, probably 20% of my money, 10% I can look at, I'll show you, is in the market. I think we're at a major decision point. And, you know, for me, it took a long time. like the stages of a trader, and this is important. And if anybody writes in the chat, hurry up and get with the charts and the setups, I'm going to get a little grumpy because this is the most important stuff for trading. Okay. A lot of people like, I don't like the fluff, or some people say that I don't like the fluff or the psychological stuff. But if you want to gain any value, it's the mindset that's required to get your butt kicked in and day out of these markets. I've been watching these markets tick for only like 19 years. So this kind of mindset is important. It took me forever to realize that as a trader, it's not your job to constantly be working, like always producing, always in a trade, always getting after it. Like that's the mentality that's kind of forced upon you by society, right? Education, your employment, your spouse. As my contractor calls, we're having our basement done. I don't usually put up with that kind of stuff, Trish. Just kidding. She just took the kids to school. So that's the only reason I would say that. So it took me forever to realize that there's times where you got to be working hard in the markets, and then there's other times where you got to kind of sit back and be content doing nothing, just observing. Usually that's punished in society, be it education or in the workplace, but trading, it's required. It took me a long time, probably 5 or 8 years, to realize that when I was a young, ambitious, feisty trader at 21 years old. Then, as I progressed, I went through Wall Street. I wound up working for a hedge fund. I was writing the daily trade strategy for the brokerage arm of that organization, and I had to kind of relearn that over, which is, it's not always about action, not always trading FYE for your entertainment to give you that little adrenaline endorphin rush when you put money in the market. And then eventually I transferred out and I went and began trading my own capital, and to leverage my skills in the market, sell the research, right? Sell an advisory business. I'm good at this, so why not compound your returns? And that was kind of step 3 of my evolution in what I do, in that I feel like you constantly need to provide value by putting trades out. And I just realized over a few more years that I'd rather not have a customer who's looking for constant entertainment, constant trading activity. And I want to work with people who realize there's times to be in and there's times to be out and to protect your capital. Long story short, fast forward 20 years, I am completely content with at times having very few positions in the market. And there's times that I'm very content running my research, trade advisory, education business, where I'm telling my people, be very careful in here. Lots of cash is king. So right now, I don't care at all. Okay. So call me, as I'm coming up on 40 years on February 2nd, I guess I'm getting a little salty. But anyways, point of that whole little, story is this is a time where I think you need to observe what's happening in this market. We're at very critical levels, and I think watching with not a lot invested in the market, I think is key. I think the result of what's going to happen here is going to be very interesting. Okay, Alex, you're the kind of guy I'm talking to. Exactly. It's sad, but that's the problem. Guys who want constant fix, go find another room. We're students of the market. We have respect for the market. And if I could boot you, I would. Okay. All that aside, let's go. The market is in a very, very unique position. This is the S&P 500 on the daily. This is the 200 EMA exponential moving average. I talked about this last night. I can't recall a time where I've seen a confluence of such tight technical resistance levels. You have, number one, the 61% retracement of this drop here. Number two, you have the 78% of this motive, impulsive, proposed decline here. Number 3, you have the 200, as I mentioned, and also a little bit more, not as much, not as precise, but you have these lows from October, November, December. We eventually broke down. We're coming back to retest as resistance. There's a ton of resistance here. It's also at the crossroads of the point where I think the next quarter, 2, 3, next year, maybe even the next 2 years, I think will be decided by the result of the test of this zone. When I tell you this zone is strong, is significant, it is. And for me, like I've found that trading towards these zones is ideal. I've been net long in my longer term stock portfolio as we're coming up to target this zone. I'm watching closely and I'm looking to unwind on signs that this wave count, which is in fact a third of a third decline, is going to play out. I don't like to trade right in the battleground. Okay, it's going to be a bloody war inside of this zone, I feel like, and I don't want to be on the front line, okay, because that's trading without ego or without pride. I think observing what's going to happen here is key. This is one interpretation. Here's another interpretation. Okay, if by chance we don't have a 1-2-1-2 motive impulsive decline, we have to consider the idea that it could be ABC down. Okay, the fact remains that we have the resistance at the 2,700 level from the 200, from the 61, from the 78% retracement. That's still the case right there. So I don't want to spend too much time deciphering the differences between this count, but very quickly what I would say is if we don't drop in a third of a third, which is still very possible in this market, if we don't drop, then I am going to quickly shift from a directional trading kind of approach to more of a theta positive, reduce the deltas, have very little delta exposure, and potentially head into a triangle. So I'm watching here. We're now in earnings season. Financials are out. It's kind of quiet on the economic data front this week. Earnings are actually not crazy this week. So I don't know what kind of move we're going to get this week. I'll show you where we are in the shorter term. I'll show you in an option position that we put on. Okay. So. Here's the position that we put. Actually, you know what? Let me show you the shorter term count for now. This is the 195-minute chart. This is going to be the half day. This is the interpretation regardless of what the higher count is. I'm looking at a first and second, a beautiful wave 3, and I was thinking that the rally up here in the last couple days was going to test the 2,700 area, but we fell short. Blue 3, oops, wrong key. Blue 3 has green 3 has a completed 5-wave move inside of there. So you could say that green 3, the rally that's existed from December 27th, is now complete. I think we're actually inside of a wave 4. And as I mentioned with the light data schedule and not too much in terms of the earnings, I think it's time to put one of these butterflies on, which we did yesterday with our customers. And I will show you what that is in a second. Let me just go up here and go scan for earnings. We'll go over the next 4 bars. We've got Johnson & Johnson. That I think that was yesterday. J&J, Procter & Gamble is today. That was out before the market. So looks like they beat a bit. Intel comes out tomorrow. That'll be an interesting one on 124. Comcast comes out today before the earnings, 64 cents on 63 cents estimates, so that's good. And then some of the railroads have been interesting. That's tomorrow. Some of the railroads have been good in a otherwise weak tech sector. So let me get my head out of the way here. Let me just pull that over. There you go. IBM was out. United Tech is already out. Wow, UTX crushed earnings, 195 and 155 estimates. Texas Instruments today after the bell. So we have some coming in. Very interesting on Intel. We'll definitely take a look at the semis here. But for now, guys, while we're in a fourth wave and we're also kind of contemplating the result of this test, okay, I think it's good to have context. And I'm watching some of the comments. Technical analysis doesn't work. That's pretty funny. If you're not aware of, and this is, don't worry, I'm gonna make a point here and hopefully not get into to Jacob too much here. But if you're not aware of what the hard red edge of the chart is, this is the current agreement between anybody who's got any real money in the market who is discounting what the future fundamentals will be. Technical analysis and looking at past price action is just simply a quick way to analyze the interpretation of past fundamental data to figure out where we're going to be in the future. And if you're not watching where the battle is occurring for the goal of winning the right position based on where data is going to come out in the future, then you're lost. I think it's a kind of an interesting era for analysis in that all analysis is extremely subjective. And you guys have heard me kind of say this again, but if you don't realize that the very art of analysis is trying to discount what's going to happen in the future, you're literally trying to predict the future. And if you think that fundamentals on data that's occurred, reporting on events that have occurred a month, a quarter ago, has any impact on what's happening now, you're lost, unfortunately. It's cool and fun and sounds intellectual to discuss the fundamentals, but that happened months ago, weeks ago. Nobody cares. Nobody cares. The market has such a short attention span. It's all about that hard red edge of the chart positioning, following real money who are trying to figure out what's going to happen in the future. So from a fundamental point of view, would you say that interest rates going up, interest rates have actually been going down if bonds have been squeezing. That's another position I'm going to show you. Interest rates dropping. Is that a good thing for the economy, or do you think it's a bad thing? And I want to see your comments in there. And Jacob Z, I want you to write something in there right now. Is interest rates dropping right now good for the economy, the global economy, or bad? You could take either side of that equation, right? You could say that, well, perhaps we have some risk aversion. We're afraid of poor earnings. Bonds are going bid. Interest rates are selling off, and it's bad. Or you could take the other side of it and say, Jerome Powell just did a major 180. He is trying to accommodate higher stock prices. He's not so concerned, perhaps, about inflation, but price stability. Maybe you could say that Jerome Powell just succumbed to Trump's pressures, and that's good for the stock market, okay? Because now we're getting lower interest rates. So, you know what I'm saying? It's open to interpretation based on almost all data. Strong earnings. If we have a strong earnings period, is that good for the stock market or is that bad? Well, it looks like Jerome Powell would have to raise rates quite a bit, and we've seen over the last 8 years two major volatility or two pretty significant volatility storms in the face of higher interest rates. Maybe you could make the argument that strong earnings are actually bad for the stock market because we'll have to raise rates. I know. I like to engage. I like to engage some of the trolls, and it's fine. But I just want you guys to think about it. So no, it's fine. And that's why I think, we're kind of at this crossroads in analysis right now because I think there's a lot of uncertainty right now that's going on in the market. And I think it's a healthy conversation. It's a catch-22, and that's it. Yep. And don't worry, guys. I just love jumping on people who write idiotic things, which is fine. So it doesn't detract from the rest of us who are really enjoying the process. And for me, I think this is a very transitional time. So I don't like to have a lot of delta exposure in here. We actually just put one of these trades on, which is the first for a while, and I'll share it with you. Let me just bring this position up. And I did this obviously live capital. That's what I do. I trade real money live. Position. Analyze. Okay. So if we go to SPX, here's a position that we're working right now. It's in the 29 March. And basically what it is a broken wing butterfly. You have deltas that are approximately around the 20, 40, 60 area. And we're looking to capture this positive theta within this range right here, okay, over the next week to 2 weeks to 3 weeks. So we're looking at from like 25.57 break even to 26.78 over the next 4 days. And if you want to go out, go into like the first week of Feb, you can see this really stretches out between 27.09 and 25.11. So 2 weeks out, you have a profit of about $1,000 potential in that zone, a nice wide zone. I will be cutting if we hit certain risk kind of management levels that we have here. But I feel like where everybody's looking for a breakout, I'm kind of wondering if we're going to do this for a while. I'm almost wondering if we go sideways. And if that's the case, that's fine. And I do think everyone is really trying to kind of play the breakdown, short the breakdown, covering their stops, getting stopped out, trying to play the breakout through 2,700, getting stopped out, selling. So I just kind of feel like we're heading into a range, a sideways range. So I have to, based on the context that Elliott Wave gives us, we have to shift our tactics. Whether it's right or whether it's wrong, doesn't matter. You have a plan, and the likelihood of an emotional response is reduced. And that's what Elliott Wave and technical analysis does for me. It filters the fundamental flows and the fundamental information flow that's coming at you to say, wait a minute, what's the general consensus of what's happening in this market? Is it in fact happening? And what's going to be the response? Okay. So for bonds are interesting here. Let me go over to this count. A lot going on here. But the decline from the bond high, July 2016, so far, guys, it could be a big three-wave decline. This is a long-term uptrend support that goes back 38 years, and I can show you that history. We tried to break below, came back above. It's definitely a point of decision here. Again, getting context. The response that we've seen here from these lows in October so far looks impulsive, which means has qualities that could suggest we go higher. You can see a nice five-wave move in formation here. 2, 3, pulling back to 4. There's the 200-day. I like to use moving averages only when they kind of support what the wave count is telling us. So again, we have positions on right here that take advantage of slight upside move, but within the fourth wave, which could be a triangle, could be a flat, it could be anything. Fourth waves tend to be long and sideways. It's kind of a similar message that the stock market's given us. So if we go over here to TLT, this is what we're actually trading. Here's the wave count I'm watching in TLT. Wave 2, it's arguable that this is off by a degree, but I'm going to, within the context that the stock market is giving me, say that we're potentially in a fourth wave. We could be at a fourth wave low. Too early to tell. But with the effective positioning of options, it doesn't really matter because I'll show you in a sec. We're trying to play for a move up to 122, 123. And somebody put an interesting question. I think it was Twitter or maybe YouTube. Why not trade the bond futures? And you could, but what I like about options is the concept that you can get directional, but also minimize the theta And if you actually get the position correct, you can actually get theta or time to work in your favor. Having that context that we're in a fourth wave, knowing wave 4 could do anything, if we just kind of hang around the 121, 122, even 123, the longer we hang around there, the more that theta, which is the amount of money you're getting paid every single day to have this position on, goes up. You're making $135 a day here on February 13th. And if by chance we hang around 122 into expiration, I could make $2,700 in this trade. The risk is $1,120. I won't let it get to $1,120. I probably have $500, $600 of risk in this trade. Not a big deal at all. Okay, so the reason I like options, especially within the context of corrections, is because you can get decay or theta positive in your favor. Now, if you have the context that we're not in a correction, but in fact in a good third wave, you could do the futures, or you could just get, just buy deep in the money calls or something like that. So that's kind of where I'm at. Kind of where I'm at. Let's see. I told you I'd look at the semis with Intel coming up here. Let's take a look at that. Semis are looking corrective, and I've kind of had this debate. I had this debate with Dan Nathan on Fast Money, and he continues to be bearish. I'm holding on to the bull side for one more move up in the semis. This doesn't look very impulsive off the highs. It looks like ABC X, ABC down. So if we can start pushing through the 200-day, I think that would be pretty constructive. So we just need a little bit of clarity in here. Here's Intel. I had a proposed fourth wave low, but it's gone very quiet here. Really, very, very quiet here. Let's take a look at where implied volatility is heading into earnings. So implied volatility is actually in the top 2/3. It's actually quite rich, which is interesting. So the actual implied volatility is about 30, 33, 34%, which is in the top 2/3 of its 52-week range. Obviously, 50 is a big old level in Intel. I'd be surprised if we stay within that range in Intel for earnings. So we'll keep an eye on him. Texas. Still kind of quiet. Still kind of quiet. Let's take a look. Another thing that I think is interesting, also related to chips, is EEM and China. Asia consists of like 50% of this EEM ETF, which is kind of the emerging markets proximity here, proxy, I should say. It's kind of a similar sideways 41 to 38 area. We're not really getting much information or much help from emerging markets. So it's kind of quiet. It's kind of quiet in here. Circling through. Dollar is trying to hold a low here. But again, I like to take the Elliott wave away sometimes and just do pure price and say, that's a pretty ugly chart. There's not a lot going on there in the dollar. Gold just continues to be fairly range bound. I'm actually, if the dollar could give us some kind of inspiration, I am still tracking a bearish count in the gold market into 1300 to 1328. This is potential to be B-wave triangle to drop down. So gold's actually coming off, looks like a little bit there. Natty gas is fine. Futures are coming up there a little bit. We can take a look at some stocks if you like. Amazon is one that I just reworked the count. I am actually tracking a pretty bearish count on Amazon. It looks corrective off the highs. I'll get off this weekly chart, get you down to the daily. This one has been interesting. I worked through a couple different iterations of this count. I work with the guys at Elliott Wave International on this one, just kind of bouncing some ideas around. But Amazon, pretty range bound between 1800 to 1400. I view this as a possible X wave up. We could have moves up to 18, 19, but at that point, I see resistance coming in, and Amazon could begin to fall. This has been a sharp move, but I still see it as corrective. Netflix, we had an earnings trade on last week. This one did not work out. We needed it down around 320. Unfortunately, it happened that Monday after our expirations, or Tuesday after our options expired. So that's a little unfortunate, but Netflix seems to be pulling back. Definitely one of my favorites. Lulu is one of my best holdings in the portfolio. Lululemon looks great. Even makes chubby guys like me look not as chubby. Twilio is another really good stock that's out there. This one is in potential a third wave break if the overall market could stabilize. Twilio is one of the largest holdings in my portfolio, my stock portfolio, so I like that. Those are just a couple stocks. Apple, I think, is Apple's not looking good at all. We had a potential wave 4 support zone here. We went down to 140 and change. We bounced up to 157. It's been a pretty meager bounce here in Apple, so I was kind of expecting a little bit more from that. All right, let's take some questions here. Tesla's a mess. Tesla's a mess. If you just step back and just look at this weekly, Tesla is I don't know, not much interest in trading this guy. 250, 386. It's either going to $50 or 1,000. I don't know. No real opinion there. What else you guys got? Yeah, let's take a look at NVIDIA. It's a good one, Jose. NVIDIA. I'm not even tracking wave counts in NVIDIA. Whoa, this is old school. I'm not even watching NVIDIA. Have to work through some counts there. Got to watch that one. Okay. Yeah, I could take a look at Bitcoin. I'm going to be speaking for Alex here, but Bitcoin is actually moving into some pretty good support zones. Let me just launch our Bitcoin, my crypto workspace. We use a software that actually allows us to, as my team does updated Elliott wave counts, it automatically updates my account on my charts and all of our customers who are linked to us. So it's kind of like Elliott Wave in the cloud. It's pretty much never been done before. So I know our team is tracking a completed 5-wave move down, looking at 1, ABC down in 2, and the potential to rally impulsively. Bitcoin really has to get going here from this 3,500 level to show us that a recovery is coming. If not, then the whole thing is just some kind of X-wave recovery, and we are going below this key 3,000 support level. If you break 3,000 in Bitcoin, like, it's just no good at all. Okay, guys. So again, if you haven't seen the latest Elliott Wave video on YouTube, check it out. It's pretty fun. It was the last one, the last vlog I put up when I went down to Elliott Wave International. And as you know, our companies, or may not know, our companies are working together. They've chosen my company out of many companies who do Elliott Wave to be their trade kind of alert provider. So this was a fun vlog. We went down and kind of hanging out with the guys at Elliott Wave. That's Bob, Murray Gunn, Mark Allman, director of corporate director there. So check it out. We got a great relationship. We had a lot of fun hanging out with those guys. Good discussion. So check it out. So it's been great working with Elliott Wave International. I'm very lucky to be selected as a company that they work with. Bob's a great guy. If you ever get a chance to know him, he's a super down-to-earth guy. He's actually from up here in upstate New York, where I am now, where I'm from. So that was fun. Okay, so check that out. It's Boating with Bob Proctor and the boys of Elliott Wave International. Check that vlog out if you'd like to waste 15 minutes of your life. Let's see. Final questions before we sign off here, guys. It's a good question there. Elliott waves don't work sometimes. What to do? Yuri, if Elliott wave doesn't work, I think then for me, I've got enough confidence in it, and I've been doing it long enough. I've been doing it for 15 years now, where I just don't have context. I don't know. I don't have confidence to be in the market, and I know to stay out. And that's what I think is important as you evolve as a trader, is to realize that you have a methodology, you've worked hard to develop it, and if it doesn't seem to be helping, there's two things. Either you're out of sync with your analysis, or the analysis or the market is out of sync with itself. It's kind of like, if your wife is kind of grumpy, maybe it's best to not go solve her problems, because it usually just compounds things. Maybe it's just time to step back and say, all right, you know what? I'll step back and I'll live to fight another day. Right? Or just say, let's approach when she's a bit more agreeable. And the same thing could be said for your husband if you happen to be a woman who is married, or your boyfriend or girlfriend, or parents or employer or whatever. So I've been doing it long enough where I say, okay, I don't have the context. But also the other side is great. When you do have the context and you are on the right side of the market, that gives you the conviction to step up and to really up the position size. Family's good. Thanks very much, Soul. It's very nice. Everyone's good. The baby's good. The boys are good. They're in preschool now, so everything's good. Life's good. Okay, guys, we're gonna leave it there. Thanks so much. Hopefully that was enjoyable, and be sure to click the thumbs up button. Comment below if you have questions, and they're good. We'll include it going forward on a new segment we'll be doing. So do that, and feature some charts if you have some good ones. And too much guesswork. Let me just leave this closing thought, and I want you to comment below. Bjarne writes, Elliott wave works, but too much guesswork. T.O. much guesswork. Show me, here's your challenge for the week. Show me a methodology that is objective, that is formulaic, that is simple and always works. If you can show me a way to simplify my life and not do multiple situational analysis using Elliott wave or doing fundamentals, show me. That's what I want to know. I think the markets are guesswork. I think predicting the future is guesswork. Show me a methodology, and I want to write your comments below. This is your assignment. I want to see everyone's below. Show me something that's simple, packaged into 2 to 3, maybe sentences of how you look at the market. Take away the guesswork. Simple, easy to understand. I want to see what you do. I feel like I'm writing marketing copy for buy my $2,000 system. It's easy to understand. Follow 3 steps and you're going to be rich. Do you understand what I'm saying? I'm just tired of you guys falling victim to this ridiculous marketing and the fact that nobody wants to admit that putting yourself in the position to succeed in the financial markets is hard. And to have the courage to say, I need to step in the unknown, which is trading with emotional intelligence, EQ, not IQ, it's EQ. So when I say, when somebody tells me there's too much guesswork, you don't have the fortitude, you don't have the drive to figure out this beautiful, amazing, complex puzzle, which is mass human interaction, playing with billions of dollars, trying to beat the next guy on trying to meet the masses in order to become rich. If you're not willing to do the guesswork there, this is not the game for you. Let me know what you think in the comments. Have a good one, guys.